Simon Pomar with Pacific Wholesale Mortgage here in San Diego. And today I'd like to talk a little bit and shed the light on the adjustable rate mortgages, which are also known as ARMs. And you know, we are end of May 2022, and you might hear a lot of the adjustable rate mortgage in the mortgage industry right now. So how does it work? What are the pros and cons? And how to understand the risks and when it would make sense to consider using a short-term loan like an ARM. Because mortgage rates have risen so much, peaking over 5%, for many qualified buyers out there, their affordability is starting to come into play because, you know, how they cannot afford as much houses as in the beginning of the year. Now they will have to consider looking at less expensive houses, or in that case, maybe use an ARM loan, which in many cases will come with a lower interest rate, allowing them to qualify for more expensive house. So what is really an ARM? ARM stands, like I said, for adjustable rate mortgage. But what does it mean when you see a 5-1, 7-1, or 10-1 ARM loan? The numbers 5, 7, or 10 represent the number of years the loan's rate will not change and will remain fixed. The number 1 after that means the rate will change every year after that, and it will adjust one time per year, each year. So if you hear a 30 fixed mortgage, it is fixed for 30 years, which has been the most common program. This is a conventional 30 fixed years loan for the past 2 years, mainly, because interest rates on a conventional fixed 30-year were even lower than what we have ever seen in history, and even lower than ARMs. ARMs become popular when interest rate on a 30-year fixed start to go up, and this is what we have seen recently. ARMs become more attractive and make more sense to use in certain circumstances. So when to use an ARM? Well, as the future is unpredictable in most cases, if you are a risk taker or a gambler, you could plan for an ARM. Can also plan for that if you plan to buy a house to live in for less than the ARM short term of 5, 7, or 10 years. And if you plan to refinance before the end of the short term, and you will be out of this mortgage with a new one, then it makes sense. Now, not everybody takes an ARM. It's still much more common to go with a conventional fixed 30-year loan. But if you take an ARM with 5-1, this one is harder to qualify for than a longer one like a 7 or 10. The 5-1 follows typically more restrictive factors when qualifying, but a 7 or 10-1 may allow you to qualify for a more expensive house. What are the pros and cons? Is an ARM the right loan for you? Well, let's start with the pros. If it's a lower interest rate than longer term loans, consequently, it turns into lower monthly payments. So you have more purchasing power when using an ARM because of that lower introductory rate. Choosing an ARM then might be a solution if you believe that the rates will go down, or if you don't plan to stay in the house longer than the short term of 5 or 7 years or even 10. Now let's look at the cons. Let's be clear. Yes, there are some risks associated with an ARM because they are unpredictable at the end of the short term, but those are calculated risks though. Understand, they are fixed for the first 5, 7, or 10 years, depending the ARM you choose. But after that, they will adjust every year. It will depend on the margin and mainly the indexes at that time. And this is something you absolutely have to take into consideration. There is a possibility of a higher interest rate in the future. So if at the end of the fixed rate period, you refinance or you take another arm, you could pay much more for another loan in just a couple of years. And if you choose a 5-year arm, this short term will go by very fast instead of a longer term, which brings more security. Consider that nowadays, people stay in their house at least 8 to 10 years. So a 10-1 arm loan would give you more stability, allowing you to take some risk. The third con to consider is if you are unable to qualify for another loan in the future, if interest rates go up. For example, you take a 5-1 arm, and at the end of the 5 years, if the rates go up, you want to refinance, but you might not be able to qualify. Then you're going to be stuck with your current loan. So if you're still considering taking an arm loan, make sure you're working with an expert who truly understands those loans and will guide you through the process and will be with you all the steps of the way and answer your questions in detail. Here, I got your back. I'll make sure you get all your questions answered and that you're making the right choice for you and your family. Let's have a conversation. And for any mortgage-related questions, call 858-353-3408. Thank you for taking time to watch. I hope to hear from you soon. This is Simone Pomar with Pacific Wholesale Mortgage, serving the Golden State from San Diego.